Let me begin by wishing everyone a very happy and prosperous and healthy 2025 to all our clients, their families, our business partners, our stakeholders, our staff. Wish everyone an absolutely fantastic 2025, with lots of happiness, great health, and prosperity. So today I'm going to take you through our quarterly investment and performance review. We'll have a bit of a look back and then we'll have a bit of a look forward. So let's kick off with our disclosures. It's important that you take note of this. So have a read through that when you get a chance, for your protection and certainly for our protection as well. So 8 years on, the Lunar BCI Worldwide Flexible Fund is in the top quartile of all the worldwide flexible funds over the period that we've shown you there. So really, we are very, very pleased, not only for ourselves, because we are invested in the fund, but certainly for all of our clients that have been invested with us. So, providing a good inflation plus return, and that's a target that we have, an inflation plus 5%. And I think if you look over the various periods, that we've shown there, we have certainly achieved that. Perhaps the most pleasing for me is that we look at all of the funds that were available in South Africa when we launched our fund 8 years ago, over 8 years ago. And over that period, we are in the top 10% of all of the funds. So really very, very pleased with our performance. Important, of course, to note that performance can vary from year to year, and past performance is no guarantee of the future. But looking back, I think our clients and certainly we are very, very happy with these performances. If we look at the last year and we compare how the Lunar BCI Worldwide Fund has done over the period, so we've provided a 16.91% return versus the JSE at 9.37%, the S&P 500, which is the US market, at 23.3%, and the world index at 18.42%. I think our slight underperformance against the world index is largely due to the fact that we were a bit conservative last year, having a bit more cash and bonds in our portfolio on the back of a very, very powerful 2023. And our view was that, the markets may have been due for a correction. But saying that, we are very, very pleased, that we certainly gave a very, very commendable 16.91% return over that period. So the question then obviously is, how do we achieve our performance and what is our investment philosophy? Okay, so we think of ourselves as owners of quality businesses that have a high growth potential with significant competitive advantages. And if we try and unpack that, so we say what provides high growth and what do specific companies have that give them a competitive advantage. So when we construct our portfolio in terms of how we want to invest, which companies we want to be investing, invest in, where do we want to invest, we look at it from 4 different lenses. The first lens is a mega trends lens. So we try and identify what are the mega trends that are taking place at a particular point in time. And a mega trend lasts over many, many years. So which means that if we are invested in a company that can get the advantage of one of these mega trends, then we tend to be invested in these companies for a reasonably long time. The second thing that we look at is the macro environment. So in other words, what is happening in the various markets? Are the markets overpriced? What is the sentiment in the market? So in other words, are people very bullish? Are they negative? And sometimes we can take a contrarian view of that because we might think the markets are too high, even though others may think that there's still more to go in the market. We look at the economic environment, the geopolitical environment, And then from that, we tend to look at which businesses we would like to own. So that will provide us, for example, with a number of businesses or sectors that we would like to invest in, and then we try and identify those businesses. And once we've identified those businesses that we would like to own, we do a valuation of that business. Now, that valuation may lead us to actually invest in that business, or we may like the business, but we think it might be too expensive, in which case we might take a smaller position, or alternatively, we might just hang on a little bit until such time that there's a better opportunity to be buying into that business. Now, once we've kind of done all of that, obviously we identify these businesses that we want to own, but at a particular point in time, given, say, for example, the macro environment, very high valuations like we see at the moment, then we would tend to have a bit more cash and bonds in the portfolio. We would never be completely out of the market because it's very difficult to time the ups and downs of the market. So having a position in cash, maybe higher levels of cash, allows us, for example, to buffer the performance of the portfolio when there is a bit of a downturn. But more importantly, it gives us the opportunity to buy into businesses if we see that downturn. So that's our investment process, and we've used this process since inception and honed on it as and when we've identified better ways, to do that analysis. So let's take a view of the mega trends and the macros in the current environment, okay, and what we see going forward. So firstly, artificial intelligence. We think that artificial intelligence mega trend is still intact. Now, last year we saw a significant investment, for example, in semiconductors, in infrastructure for the AI space. And we think that that will continue, maybe at a slightly slower rate, but we see particular growth in the software side. So in other words, these AI models, the companies that are providing these AI models, and the companies that have a huge collection of data and are able to use that to train these AI models. So we're definitely looking at that space. Then we look at various businesses and we're saying which businesses could potentially be using AI in a very positive way to change, for example, their business models or to create more efficiency, etc. And a good example could be, in software development, where AI agents can help a developer to become much, much more productive than they currently are. So we see real opportunity in that space as well. Now, one of the things and let's call it a side effect, of artificial intelligence is that there are very, very high energy demands. So you've seen, for example, companies like Microsoft and Amazon tying up with companies that provide nuclear energy to be able to meet the energy demands of these AI infrastructure. So those are some of the areas that we are looking at investing in and are already invested in. The second megatrend that we see is the health and the healthcare and the health consciousness environment, trend. So what we're seeing is that the obesity treatment has had a significant impact on overall health outcomes. So firstly, there's just a lot of people that can benefit from some of these obesity treatments, and a lot of people are already using them. So many of these companies like Novo Nordisk and Eli Lilly, who we are invested in, have basically been investing in the infrastructure or the factories to be able to produce these treatments and improve on these treatments faster. And we see continued growth in that, and there are those side effects of that. So for example, where people living longer, having better healthcare, losing weight, going back into exercise, etc. So that's an area that we certainly seen some nice opportunities for us to continue to be investing in. And then we talked a little bit about the energy transition side of things, from an AI point of view, going into nuclear, And certainly, we're seeing more and more electrification, and the scare of climate change. You've seen some of these disasters that are taking place really will continue to move us in a direction, slowly but surely, into less reliance on fossil fuels. Fossil fuels won't go away soon, but certainly we will see a migration into other forms of energy. From a macro point of view, certainly the Trump presidency in the US will create a lot of uncertainty. And the global geopolitical kind of tensions that are taking place, how that pans out under Trump administration, it's really very hard to kind of predict. But we certainly would see that continuing, and those also either provide us with a direction of where not to invest in on the one side, or alternatively where to invest in. High levels of government debt in the US is certainly a consideration. Inflation has been reducing, but it has over time strained the middle classes, and that has changed some of their buying habits, and that tells us where we should also be looking to invest in. We think that the greed and fear sentiment is one of the key drivers of markets in the short term, but valuations matter in the long term. And we try and find where's the right balance between where the sentiment is versus where the valuations are, and how do we position ourselves for that. And of course, South Africa with the GNU and in some areas the very poor service delivery is impacting some of our decisions in how we invest in that space as well. So if we look at the Lunar BCI Worldwide Flexible Fund, you can see our highest position at the end of the year was in the short-term treasury in the US, and in cash, both in South African rands and in dollars, and that is sitting at over 20% at the moment. But we are still invested, for example, in the tech sector with NVIDIA, Amazon, Microsoft, and SML, in the financial sector with JP Morgan and UBS, in the retail sector with Walmart, in the pharmaceuticals with Eli Lilly and Novo Nordisk, not in the top 10, but it's certainly there in our investment, and then in Berkshire Hathaway, as an energy play, but we've also got an energy ETF in the portfolio. On the offshore side, you can see we still continue to have a very substantial investment in the IT sector, and you can see again there cash and bonds taking a significant part of the portfolio. That's the orange, the 21%, and then in the retail space, particularly looking at retail, in the way that we see these macros playing out, and then some biotech and financial resources there as well. And then, of course, we try to diversify in some of the other areas as well. So, some levels of concentration, but certainly a decent level of diversification as well in the portfolios. So that's basically our view, of how we've performed, and also, what we see, in the coming year. There's some contact details. You can subscribe to our newsletters that comes out now once a week after the holidays, and we get these quarterly reviews and a whole bunch of other things that will come through there as well. And our two products are the Lunar BCI Worldwide Flexible Fund, where you can invest on a debit order or in a lump sum, or the direct offshore portfolio management service, which requires a minimum of R500,000 and using your foreign exchange allowance to be able to get into that. And the reason that you might want to consider Lunar Capital is that we give you significant offshore exposure. We've got a pretty good track record over the period that we've been around. We have skin in the game, so we are all invested as investors, as directors, as shareholders, in the business. So I guess we eat our own cooking, as they say, and we love to meet with our clients and give them a personalized service. So that's it for today, and looking forward to hearing from some of you.